So, what if I told you there's a single, overlooked signal that says the global recession is already over? Today, we're going to dig into the one piece of data that suggests maybe, just maybe, the headlines have it all wrong.
Look, it feels like for the last couple of years, all we've heard is bad news, right? Economic trouble, looming recessions, global instability. That anxiety is real. But what if the story the data is actually telling us is completely different from the one we keep hearing? To cut through all that noise, we need to look at a really key indicator. It's called the PMI, or the Purchasing Managers' Index. Just think of it like taking the pulse of the economy. It's a survey of businesses asking, hey, are you ordering more stuff? Are you hiring? Are you expanding? The PMI boils all that down to one single, powerful number.
And the magic number here is 50. It's the dividing line. It's that simple. If the PMI is below 50, the economy is shrinking. Companies are pulling back. But if it crosses above 50, well, that means the economy is expanding. It's growing. So, what's the big news? What's the secret signal? Well, for the very first time since May of 2022, the world's three great economic engines, we're talking the United States, Europe, and Japan, have all crossed that critical 50-point line at the exact same time. This isn't just one country doing well. It's a coordinated signal that things are heating up globally.
And to really get why this is such a big deal, you need a little context. Europe, especially, has basically been stuck in contraction mode since 2021. So seeing these two economic giants, the US and Europe, cross into expansion territory together, moving from below 50 to above it, that is a massive shift. It tells us this isn't just some random blip, it's a real, coordinated turning point for the whole world's economy.
Okay, I know exactly what you're thinking. This all sounds pretty good, but what about the elephant in the room? What about China? Every headline has been about their collapsing property market, their sputtering economy. How can we possibly have a global recovery if China's in trouble? Well, here's the kicker. According to the data, that whole narrative of China's collapse might already be out of date. The evidence is actually starting to suggest that China's so-called lost decade, a period of Japan-style stagnation that started way back in 2015, is finally coming to an end. Now, this lost decade, what it really was is something economists call a balance sheet recession. Basically, when asset prices, think stocks, real estate, fall hard, it wrecks company and bank balance sheets. That freezes up lending and kicks off this nasty deflationary spiral. But now, in 2024, the key indicators that signal an escape from that very trap, they finally turned positive. So the recovery plan, it's really in two parts. First up, the stock market. The Shanghai index hasn't just hit its highest level since that 2015 peak, it has more than doubled from its recent low. That helps repair all those broken corporate balance sheets. And second, housing. China did something pretty drastic. They cut new housing construction by a staggering 75%. That's finally letting supply and demand get back in balance. Prices have stopped falling and are actually expected to start rising later this year.
Okay, so this global data, it seems to fly in the face of another source of constant anxiety, doesn't it? I'm talking about the breathless, minute-by-minute coverage of central banks. It's time we talk about tuning out that noise. You and I, we're trained to believe that every single word from a Fed meeting holds the key to our economic future. But is that actually true? I mean, who is all this chatter really for? The truth is, that level of obsessive focus, it's for a tiny, tiny group of people. Multi-billion-dollar bond traders making high-stakes bets on daily wiggles in the market. But for the real economy, where people actually build things, sell things, and hire other people, this stuff has almost zero connection to the big, long-term cycle of expansion and contraction. And that kind of reveals the real game here. A lot of those big announcements, they're less about actually steering the economy and more about what you could call psychological signaling. The central banks are managing our feelings, our sentiment, but the underlying economic cycle, it has its own powerful momentum. In the long run, the economy is going to do what it's going to do. So let's zoom out. Once we tune out all that day-to-day noise, we can actually see the big picture. And what we're seeing right now, it's a truly historic recovery. You see, the post-pandemic squeeze that the world just went through, that wasn't just some minor slowdown. When you actually look at the numbers, it was a massive event, one of the most severe economic contractions in the last 45 years. To put it in perspective, the downturn from 2022 to 2024 belongs in the same category as giants like the Volcker shock in the 80s, the IMF crisis in '97, and of course the global financial crisis of 2008.
We just lived through and are now exiting an event on that scale. And once you understand the depth of the valley we just climbed out of, the view from the other side becomes that much clearer. This isn't just getting over a small cold. This is the start of a whole new expansion after a major, major economic illness. And that makes this coordinated global upswing incredibly meaningful.
So after looking at all the key signals, from the PMI data in the West to the deep market recoveries in the East, the conclusion from the data is really pretty straightforward. The painful global contraction is over. A new period of global expansion has already begun. The numbers are telling a clear story of recovery and growth. So the only real question left is a psychological one. After years of negative headlines and feeling so much economic anxiety, are we ready to tune out the noise and actually believe the data?